Hi, my name is Lynette Aboud, and you are watching Property Finder Talks, where I speak to leaders in the real estate industry here in the UAE. Today, I'm joined with Siddiq Farid, who is founder of SmartCrowd, which is a real estate crowdfunding platform homegrown here in Dubai. It's also regulated by the DFSA. Hi, Siddiq. How are you?
Thanks, Lynette. Thanks for having me.
Thank you for coming on the show.
Absolutely.
My first question for you.
Sure.
Why are we sitting in Fintech, Hive, and DIFC?
Well, you want the short version or the long version?
Mid.
Mid, all right, cool. So Fintech Hive is a DIFC's initiative to invite fintech startups to come and house them and take advantage of the infrastructure that's been set up here by the DIFC, and also provide you access to the regulators such as the DFSA, the Dubai Financial Service Authority. So back in 2017, we participated at GITEX, and we were shortlisted for Accenture Innovation Awards. And we won the fintech category, which the prize for us was to be part of this inaugural Fintech Hive Accelerator program, fall of 2017. So that was our journey, that's where we started, and we've been here since then, and DIFC has been extremely supportive of our venture up to this point. And our offices are based over here, and we work out of the DIFC Fintech Hive.
What a great story, especially like you're homegrown here in Dubai.
Absolutely, yeah. It's been a fantastic journey. I tell a lot of people I speak to, it's probably the best time to be an entrepreneur in UAE. Yeah. The amount of support, the ecosystem that has developed over the last 2-3 years that I've been part of it is phenomenal. I interact with startups, entrepreneurs on a daily basis, many that are here in the Fintech Hive, and the level of governmental support and a lot of the private sector support that is starting to come into the scene has just been phenomenal as part of our journey. Amazing, and congrats on your recent Arabian Business Fintech Startup of the Year? Fintech Business of the Year. Yeah, so that was a shocker for us, unexpected. Just got an email one day, like, Siddiq, we'd like to invite you for the awards. You have been selected as the Fintech Business of the Year, and I was sort of taken back by it. You know, even the team was like, wow, we were doing a lot of innovative things, right, etc. Sometimes we don't give ourselves enough credit in terms of what we have achieved. So from external, someone recognizing that is just, it was very humbling and sort of an awe moment for the entire team. But it's been a great effort for the entire team to be recognized for our efforts. Yes, congratulations. Thank you. So real estate crowdfunding platform. Correct. Give me a layman's perspective or definition of what that means, yep, and what that means here in Dubai. Yeah, so the concept is extremely simple, right? So think about it. What we do is we take a real estate property and literally break it down into smaller chunks, right? So take a $1 million dirham property and think of it, we're breaking it down into 100 slots of 10,000 dirhams each. And then what that does, it allows people to buy as many slots as possible of 10,000 dirhams. And then collectively people will own that property and benefit from the returns generated from that property, whether it be rental income or any capital appreciation in the future when we exit the property. So it allows people to get onto the property ladder with small amounts of money and without necessarily taking a concentration risk by putting $1 million dirhams into one single asset, where they can take whatever investable capital they have in real estate and spread it across multiple properties. Okay, so let me try to break this down. How much, as a consumer, do I need to invest into your platform? So our minimum ticket size is 20,000 dirhams at this stage, with the view in the future to bring it down lower, to give more people access to it. So all you need is 20,000 dirhams as an investment towards that property. There's obviously other additional costs that you have to factor in, such as the land department fee, the brokerage fee, all the other costs, such as trustee fee that you would have to pay if you were buying a property yourself. The only additional fee that you have to pay is our structuring fee, which we charge 1.5% at the time of the investment. And we also charge 2.5% on the time of the exit, and an annual administration fee. But at the time of the investment, the only additional fee that you have to pay is that 1.5% that you're paying for our services, for which you get a nice digital platform to make an investment and manage your entire portfolio from the convenience of your personalized dashboard. So for 20,000 dirhams, I can, for example, be an investor and own a fractional part of a property. Correct, yeah. How many other investors are in this property with me as well? So it depends, varies, right? So we've had properties where we've had as little as 8 people to a property and as much as 35 people to a property. So it varies in terms of the ticket sizes of people that are putting in. We've had people, in the past we had trialed with minimum ticket size of 5,000 dirhams. So in some properties we have investors who have put in as little as 5,000 dirhams, and we've had people put in as much as 125,000 dirhams to a property. So it depends on the property price and how many people. But on average, we expect people to have anywhere between 15 to 30 people to a property, collectively owning the property and benefiting from the returns.
So what is the holding strategy as a consumer like me if I invest into this platform? Do I need to be an investor for 2, 3, 5 years? How does that work?
Yeah, so real estate should be taken as a long-term investment. And what's really important is, well, when we first started this concept, the idea, there was two things we were trying to solve, right? One is giving people accessibility, but what was also important is giving people accessibility in a fashion where they can sustain their investment through cycles. So if you think from that perspective in terms of where the Dubai real estate cycle is, if you look at historically, the real estate cycle in Dubai averages between 5 to 7 years, and we are probably at the sort of the back end of that cycle of the bottoming out, where the next cycle uptake could take another 4 or 5 years. So what we are recommending investors who are coming onto our platform that you should have at least a horizon of 3+ years to hold a property. We have a suggested period of 5-year holding period. And what's important is we focus on properties that are good income generating properties, so you can get paid well while you wait for the next uptick cycle to exit at a premium to what you had bought the property at. So your overall return on your investment will be quite attractive.
How, as a consumer, am I protected? How do I know that I own this piece of property? Very
important, right? So it's a very important question. And when we first started our vision, what was very important for us from day one was to ensure we gave people that comfort, that confidence that they are putting money into a platform that is well regulated, well structured, where my investment is protected. So one of the first things we did was got ourselves financially regulated. We didn't need to be, but that was a conscious decision we made to ensure people are getting a good value product. So the beauty is in the structure of how these things are set up. So we comply with the DLD laws and regulations, and as well as being set up here in the DIFC, we leverage the MOU that is signed between the DIFC and the land department. So each property is housed in a SPV, special purpose vehicle, essentially a company that is set up for each single asset that we do. The property is registered under that SPV, and you as an investor become a shareholder in that SPV. And all this information is public. So you can go to the public register of the DIFC, put in the company name, and see yourself on the share register. And as well as you can go to the land department and see that property being registered against that company. And you have share certificates for your shares in that company as well too. So you have full transparency and full legal recourse in terms of ownership on that property. And that's very unique, and that's one of the things that differentiates us from a fund structure or a residential investment trust, such as Reits and so forth. We don't have that level of transparency and control on your investment.
So let's talk about returns. Obviously, it's the most important part for the consumers. What kind of returns have you already provided to your clients? How are they provided? Are they on a monthly basis, yearly basis? And also, what type of properties do you target?
Yeah, so our returns, we don't promise anything different than what the market returns are. Sometimes we are very aggressive in terms of negotiating, finding properties. We have a very stringent screening criteria in terms of evaluating properties before they go onto the platform. We don't want to just give you access to real estate. We want to give you access to pre-vetted good investment opportunities in real estate. So we do a lot of homework before the property goes onto the platform. So income is quite important to us. So we tend to focus at best at market rates or slightly above market rates. And they can vary anywhere between 6 to 9% depending on the property, the location that you're looking at. So far, our investors have realized an annualized return of just about 9%. Some of those properties were, when they bought into, the rents were higher, and they have been reset, obviously. So the rents have come down. At one point, the annualized returns were above 9%. But in terms of frequency of returns, that depends on the frequency of rent collection. So if you have a property that's rented on 4 checks, investors would get a dividend on a quarterly basis. Properties that are rented on a short-term basis, on a monthly frequency, then the dividend distribution will be on a monthly basis as well too.
Interesting. And how many properties have you transacted so far on your platform?
So we've been live to the public since November of 2018. We have successfully concluded 4 transactions worth approximately 2.2 million dirhams with 47 investors. We've been very cautious in terms of our approach, in terms of finding the right opportunities. For us, it's more about quality than quantity. We've got a lot of interest, and we are just getting ready to ramp up at the back end of this year. I'm quite excited actually for 2019 and leading into 2020.
So good. So what's the next reiteration of the platform?
Oh man, we can be here for a while in terms of the opportunities, the innovation that is just bubbling in our team in terms of what we can do with this powerful platform. Right now, the focus is purely on investment properties. We are focusing on Dubai properties, UAE residents. Our next iteration would be to make this platform accessible to non-UAE residents to bring more foreign money into the country, into Dubai real estate, and then eventually also give people opportunity to invest outside of Dubai into other real estate markets, to really give them the opportunity to diversify their exposure, their real estate exposure, currency exposure, geography exposure, and really allow an individual with small investable capital to have access to direct real estate in their portfolio and get the diversification that until today only the wealthy had access to take advantage of.
How could you compare your platform to buying off-plan as far as investment is concerned?
So what's really encouraging for me from an off-plan perspective, it's still booming, right? So there's a huge appetite from the investor community to get on the real estate ladder. And for many, that's the only affordable way to get on the property market with all the generous payment plans that a lot of the developers are offering from when it comes to off-plan. But what we try to educate to investors is that's great that you're getting ability to get on there, but you have to make sure that your risk is calculated accordingly, because not to say off-plan is not a good investment opportunity, but it carries more risk than a ready property. So yes, it's affordable for you on a sort of a payment plan and a post-over payment plan, but you have to realize that you'll be paying capital into a property for many years before any capital comes back to you. And for you to really make money from a return perspective and time value of money, that property price has to appreciate substantially for you to come out on top.
Right.
Whereas we're offering the alternative of bringing that same level of affordability in today, right now. You can invest today and start earning money tomorrow. So what that does is it protects you. It gives you that downside protection because you have a property that's generating you income, regardless what happens to the market. As long as you're not selling that property, you're not incurring a loss. It's just the paper loss. As long as you're getting paid, you're fine, right? And the fact that you've only put in a small amount of money, you don't have any payment commitments and so forth, you can be patient and sustain that investment. And you won't necessarily have to take that property, appreciate tremendously for you to make money, because the chunk of your returns are coming from the income that is being generated today. And cash in hand today is a lot more valuable cash in the future that might or might not come.
Of course. So as a consumer, what if I want to live in a property that I'm investing in? Do you offer that product yet?
Not yet, but
thinking about it?
Absolutely.
Because that would be a really good one.
Absolutely. So right now the platform is very much focused on the investment side of things. We do have envision to bring an end user product onto the platform as well too. What's really encouraging is the land department has already laid the foundation with the rent to own scheme that has been out there. We obviously have to work with the regulators over here to bring them on the same page, where we can bring an end user product onto the platform where you could potentially own a property financed by your peers and then and sort of pay rent to them and eventually own that property over a period of time. So it hasn't been done anywhere in the world, and we are really hoping we'll be the first ones to do it. But we have to align all the stakeholders involved, because we want to make sure who's buying the property to live in, the people that are investing in that are well protected and ensure the structures are sound.
Absolutely. I mean, look, our knowledge at Property Finder of what consumers are looking for, rent to own is top of their list, and there's not enough information out there about those type of properties, who's offering rent to own. But something like this, which just you have that added interest into the property with the investors, I think would be a very big hit for you guys.
Absolutely, yeah. So I think the opportunity for that is not just in Dubai, everywhere in the world, right? So we have this thesis at our organization where we feel like home ownership rates are going to continue to decline all over the world, not just because of affordability, just because of lifestyle changes, choices. Mainly for millennials, they're more interested in experiences and flexibility. They don't want to be anchored down in one location with large debts and so forth. So this whole concept of shared economy and providing them the ability, okay, you don't want to buy real estate to live in like your parents and so forth and generations, but it's still a good investment asset class, right, for you to make money. So if you can make it possible for them to use their technology to easily access this asset class and generate income and subsidize their lifestyle, I think that's the way of the future. And we made that possible, right? You can go onto your platform today on your mobile, go to smartcrowd.ae, create an account, 5 clicks, and you can own a property in Dubai. That is amazing.
It is. It is. Definitely disruptive, I would say.
I would like to say we're not disruptive, we're collaborative, right? Because it brings a lot of benefits to the industry.
Yeah.
It brings more transparency, it brings new demand, it's beneficial for developers, for inventory holders, for the banks. So we're disrupting not by taking someone else's lunch. We're essentially, I would say, we're growing the pie rather than taking a big chunk of the pie.
Very good. You touched upon a little bit earlier about Reits.
Yes.
So give me the difference between your platform Reits and the benefit of your platform versus Reits.
Sure, yeah. So there are some similarities, but a lot of major differences. So one of the few key differences I would like to highlight between us and a REIT is the level of transparency and control on your investment decision. So in our platform, you know exactly where you're allocating your capital, meaning you decide, I want to put 20,000 dirhams in that particular marina apartment in that building, as opposed to in a different asset. Whereas in a REIT, you're giving money to a fund manager who's making decision on your behalf in terms of what their capital is being allocated. So you have more control in terms of your investment decision, your transparency, exactly what you own and how you're generating your income. And what that does is also cost structures are quite different, right? So with REITs, the infrastructure costs are quite high. In terms of you have to pay the fund manager, you have to pay the fund administrator, facility managers, and so forth. So when you look at the gross yield and what the net yield is, there's a big haircut. Anywhere between 60 to 40% haircut in terms of what the gross and the net yield is. In our situation, it's much leaner. So the only thing you're paying, you obviously have to pay service charges for your property, you have to pay a property management fee, and you're only paying additional administration fee that we charge on an annual basis. So from gross to net yield, it's a lot more leaner from that perspective. You get better returns from that perspective. You control in your decision. The other thing I would say is diversification. So if you look at it purely from a portfolio perspective, if you have a portfolio of stocks and bonds, and you have REITs are fairly correlated with the stock market, meaning if the stock market goes up and down, the REITs tend to follow in a similar direction, whereas direct real estate, meaning things you can point fingers to that I own a property, doesn't necessarily move at the same direction the stock market. So it gives you better diversification, rather protection against your wider portfolio. And many people just don't have enough money to buy shares, stocks, and then go buy an apartment or 2 apartments or 3 apartments. By our platform, what it does, it allows you, even if you have $100,000 to spend, you can spend invest $40,000 in stocks, $20,000 in bonds, and remaining $40,000 in diverse real estate portfolio that is direct real estate, gives you better diversification. So those are some of the major differences. The advantage that REIT has over our platform is probably liquidity in terms of it's traded, so you can easily get in, get out. But that comes at a cost, right? Because anything that's liquid, you have to pay a price for it. So if you look at the REITs that are in Dubai, there's 2 publicly traded REITs. They do provide liquidity on the stock market, but they're not highly traded. So the liquidity is not that liquid, right? So, and the REITs are difficult in this environment because if you look at in the developed market, REITs are mainly structured for tax efficiencies, to enhance your returns from a leverage and tax perspective. And we don't necessarily have a very complicated, robust tax structure here yet at the moment. So the REITs don't necessarily make a lot of sense for an individual retail investor. Maybe at an institutional level for them to liquidate some assets and so forth, it might make sense. From a retail investor, I'd rather go buy a property outright or use a platform like ours where I'm making 7-8% return. I have control on that property than giving money to a REIT and paying a lot of fees.
Oh, makes sense. So you recently signed an MOU with the Abu Dhabi government.
Correct.
Can you go into a little detail about that?
Sure, yeah. So it's very exciting. They reached out to us. This is the municipality of urban planning, essentially the land department of Abu Dhabi. And they want to bring this concept to Abu Dhabi, the capital, and it makes a lot of sense, especially with the recent announcement of freehold ownership in Abu Dhabi. The timing is great. So they see the value and the future of this fractional shared ownership model, and they've seen our success, and they said, SmartCrowd, we would like for you to come and be part of our think tank in terms of putting a framework together in terms of what kind of rules and policies we need to put in place, and we want to learn from your experiences, having what you've done already in Dubai. So I think that was very encouraging and a sort of a sign of validation in terms of what we have done is actually being recognized by various stakeholders, and they see us as a subject matter expert in doing this because we are the first ones who've been able to be patient and persevered and cracked it. So it's very, very exciting, and it brings credibility to us and our team and our management team, and it gives us an ability to really drive the innovation, right? And this is what I really, when I started, when I told you, it's great to be in this country where there's so much support from the government-led initiatives. It's exciting for an entrepreneur to take advantage of these things.
And it's so exciting to see.
Absolutely.
So let me ask something maybe I probably should have asked in the very beginning. How was this concept born? Why did you decide to do this?
So this goes back almost 3 years ago, summer of 2016. Wow, it's been that long. I wanted to invest in real estate. All right, I was actually quite focused on investing in the UK property market, with the view that Brexit would take place, sterling would come under pressure, and be a good time to buy some property in the UK and just forget about it for the next 10, 15 years. You'll make money on the property, you'll make money on the FX, and it'll be a no-brainer. However, when you start looking, I quickly found out I can't afford anything in the UK market, especially in the things that made sense to me. And I didn't want to do financing, so the next best thing was let me talk to my family and friends. And they didn't necessarily share the same risk appetite as me. That's when it got me thinking, I'm sure there's a lot of other like-minded people like myself, but there's no avenue for us to come together and take advantage of opportunities like that. And that's when the idea sort of started percolating. It was like, wouldn't it be cool if I can go to a platform where I can find people like myself and put our capital together and buy something, right? And so I started doing some research. I was quite sad to find out that I wasn't the first clever person to come up with the idea, but it also was a great validation because someone has done it and proven it, that it works. It was a company out of US called Fundrise, the first company to do this back in 2012. And they've been successful, massively successful. And when I started looking further into that model and see how that fits into the region over here, where you have a lot of expat community, higher disposable income, relatively good savings, but lack of investment products. You know, we hear about this every single day in the radio and the newspaper. People taking into scams, investment scams, and so forth, or poor products. And real estate culturally in this part of the world is an asset class that everyone prefers. But a lot of people don't have access to it because it requires a lot of capital up front. So it started making a lot of sense, like, listen, there's a massive gap in the market and we should do something about it. So it was born of a personal need. And hence, the way we have developed this, I have put myself in the investor's shoes in terms of what will make me comfortable to go on www whatever and put 20, 30,000 dirhams onto a web platform to buy real estate. That concept, you know, a few years ago was an alien concept. But we made that possible, and so the whole journey, the whole experience has been from that perspective, born of a personal need. So the team is extremely committed and passionate about solving these challenges and giving masses the access to one of the largest investable asset classes in the world.
And your background is in finance, correct?
I am a finance geek for my sins, yeah. I've been a corporate finance professional since I left school. I'm a trained chartered accountant, a CFA charter holder. You know, my wife tells me I'm forever student, so always continuously learning. Very curious mind, right? So I always want to know more, and that's done well for me in terms of doing this. Obviously, you know, I have a very supportive management team, founding team on this venture. You know, I'm not a techie, but I've learned a lot over the last couple of years building a tech business. So I have a founder that is very tech focused and has that experience. We have people that are real estate experts to fill that gap in. So I recognize where the gaps have been and brought in right people to support the vision.
So now, Siddiq, I'm going to ask you the signature Property Finder Talks question.
Oh boy.
Okay. If you have unlimited amount of resources, what would you do in the real estate industry?
Wow, that's a very big question. Wish you had prepared me for this. Listen, you know, we set out with a very clear vision and passion, right? We feel like we're making an attempt to level the income inequality in the world by giving people access to one of the largest investable asset classes that historically has been only accessible by the wealthy. So when you look at the Maslow hierarchy, you know, shelter, roof over your head is one of the key necessities of people, and giving them ability to whether own a property, whether it's an investment or a roof over their head. I think if I have unlimited resources, I would really focus on a product where it makes it easier for people to own their own home, as well as homes to create secondary sources of income that allows them the ability to really go after their passion, right? Because a lot of the wealthy, what they are able to do with their capital is they're better able to allocate their capital and manage their risk. That allows them to take bigger risks, concentrated risk that really gives them the ability to generate wealth an ordinary person is too focused of working and making ends meet, where they don't necessarily have the ability to park their capital in a way that allows them to really take those risks, change their career professions, to really do something really passionate about. That sense of financial freedom, this is what I would do using real estate with unlimited resources.
Wow, that's one of my favorite answers.
Thank you.
Thank you, Siddiq. It's been such a pleasure having you today on Property Finder Talks.
Thank you very much.
Thank you for watching this episode of Property Finder Talks. Stay tuned for the next ones where we explore the ins and outs of the real estate industry here in the UAE.